The Share Pickers Weekend Podcast with Justin, Paddy, Peter and Steve. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the Weekend Podcast. I'm joined by Paddy, Peter and Break-Even Stephen. Well, in fact, Paddy's not here, is he?
No.
Anyway, lads,
he's just going to randomly join us halfway through.
It was we're going old school. We're going minus pad. You know, discounted pad. Because Paddy's he's gone with the boys.
Yeah, where's he gone?
With the boys for the weekend.
Has he gone fishing?
Yes.
Am I making that up, or did he say he was going fishing?
You are making that up, Steve. Why are you making that up? So, Steve, first of all, what time are we recording the podcast? Because I'm making a feast. And Steve, you live on your own, didn't you?
Yeah.
I like the idea. Steve bringing out all the best cutlery and everything, really treating himself. A little candle. Ooh, and the next course, sir. Oh yes, what is it? Talking to himself, and having these silver platters, and unveiling of the food under the what's those big domes, metal domes they call?
Silver domes.
Just Steve dressed like a silver service, you know. You know, one of those characters. I don't know if you saw him. Maybe in the 80s, the comedian, and he used to have a female character one side and a male character the other side, dressed up like was it Dick Emery? He was singing male and female. He turned to the camera one way, or I think Tommy Cooper did that. And like Steve like that, dressed as a silver service waiter and just served himself. Yeah, and sir, you'd be really surprised with the next course coming up next. You'd love it. Oh, and Steve turned on. Oh yes, I look forward to that. So tell us, Steve. Pray tell us, what was the feast?
I did traditional Turkish shish kebabs.
Traditional? How traditional are they in Cardiff?
I got the recipe off YouTube, so I'm not sure how traditional that probably is.
Okay. And how Turkish were they?
Traditional.
It tasted nice.
That's the main thing.
Yeah, actually, I'm very impressed with them. I was doing a bit of a pre-run for a few barbecues coming up because I wanted to have a speciality dish that I take to like a friend's house. So I was like, I'm going to be the chicken skewer man.
Is it a pre-run up to it, Steve?
Yeah, and I can officially say the pre-test run went very well.
And do you know what? And the bonus is, right, those kebabs are only £1 a box from Asda.
Exactly, yeah.
really cheapies. I'd be cracking to be turned up with those in a Asda own brand traditional Turkish fish kebabs. There we are, £1 for £5.
How many kebabs, Steve, were there in your feast?
I made about 10.
Wow, and you ate all of them?
No, I had 2, but I put all the rest in Tupperware, and that'll be lunch and maybe freezer. Yeah.
Tupperware.
Dream, isn't it?
That's a word from the 80s as well, Tupperware. Before we start stocks, I just had one of the oddest afternoons ever because I've woken up twice, 2 o'clock in the morning, last 2 mornings, and I couldn't get back to sleep. I ended up getting up. And you obviously feel tired. I didn't, and so today I thought I'm going to have a quick nap because my eyes are really tired. So I've got to record the weekend podcast later. I'm feeling really low on energy. Anyway, I just fell asleep. Next thing you know, Fred was knocking the door of the bedroom going, Dad, we learned about sex education today. This is me after half an hour's sleep now, really drowsy. What? Sex education. So I know about it now. I know about sex education. Yeah, I know all about it. You know, so you can ask me questions if you want. I thought, what? I'm half asleep here, really drowsy. Oh, and by the way, so-and-so, his friend, he names a friend, yeah. He had a seizure. What? Doing sex education. Why? He said, because they were talking about foreskins and he couldn't handle it.
Is that a seizure? Or did he just pass out?
Well, I don't know. He felt really ill and fell on the girl next to him and went on the floor and started punching out. What? I know. So I was there half asleep. And I closed my eyes, closed my eyes, fell back to sleep. And I thought, did I just have the weirdest dream ever?
Yeah.
Let's do that. And I said, but Steve, he was really impressed. You know, I know you can ask me questions about it. I'm not going to ask you questions about it, am I?
No. We don't need to test you. Yeah. Wow.
So very really drowsy, odd thing.
Yeah.
But,
surreal.
Anyway, stocks. Here we go, guys. I've got my on the mid-week webinar. Thanks for joining, guys. I know you were there this week, and you stay quiet in the background. I appreciate that.
I was otherwise engaged this week. Sorry.
You always say that. Well, what was happening?
No, I'm just busy. 6 o'clock on a Wednesday is not great for me.
What do you do at 6 o'clock in the morning? Steve did start joining. Oh, he's dropped out as well now, Steve.
That's worse. That is worse than me not coming at all.
How's that worse? I supported from the very beginning.
What were you there for?
What?
How long did you stay for?
I stayed for the whole time, yeah. If I'm on it, I'm on it for the night.
Oh, okay.
But you haven't been on it for how long? You just got the routine. What are you watching? Some trash.
I've also been busy with work as well, so
making feasts for pre-runs for barbecues.
Barbecue strap.
Yeah.
Right.
Anyway, so this week I started off by saying, right, I've got my 5 stocks. They're my high conviction 5, high 5 conviction stocks that I'm going to hold. And we haven't revealed. Obviously, the club members will know what the 5th stock is. I talked about the other stocks, but I'm going to reveal it right now. So if you got a drum roll there, Steve, something.
Yeah.
Okay, not yet. That was just breaking wind through your lips there. And the 5th, of course, I've talked about Gfinity, talked about Escape Hunt, I've talked about Polarean, I've talked about Trufin, okay? They're 4. And the 5th stock is making up the final in my high 5 convictions. Drum roll there.
Steve.
That's the worst, isn't it? Just reveal it.
Is that what you do when your clients ask for a drum roll?
Oh no, usually I've got sound effects, but don't tend to have that linked up for this. How would you do a drum roll? That just sounds like I'm blowing a raspberry. Oh yeah, that would make sense.
That'd be better.
It is Europa Metals. No, imagine that. PT, I've gone back in. Break even Steve, he's out of there. Yeah. Oh, boys, they don't have my money. Once I'm back to break even, I'm out of there, boys. I'm ruthless. That's why they call me Break Even Stephen. They don't call me that for nothing. Yeah. It's Biome Technologies.
Right. Yeah. I don't know what did you want from us? A reaction?
I don't know, actually. I didn't expect I mean, we're not American.
Wow!
We're not American. Woo, woo! Yeah. The Americans would do that anyway, wouldn't they? And they say, what's it all about? Yeah, what's the ticker, man?
What's the ticker?
It's Biome. 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 Yeah. Biome.
There's no E on it.
Biome. Yeah. Biome. No, that's the name of it. The ticker is BIOM, Steve.
Yeah.
Right, but it's
I thought you were doing the ticker. I said you're adding an E on the end.
That's confusing, wouldn't it?
Yeah, I don't want the company name.
Don't go confusing me now.
Yeah.
So listen, what do they do? Right, 2 sections to the business. I'll be doing a video on the weekend, so you can have a look at this and the reasons why it fits from my filter. And I'm looking for, and this is it now. It comes down to, I've tweaked the strategy quite a bit there. It's getting tighter. It's getting really tight, the strategy now. And as long as the thing is, making rules are easy, isn't it? It's sticking to them. That's the thing. So it's have you ever heard of GARP? Have you ever heard of that?
No.
Well, GARP is a way of investing. It's called growth at a reasonable price, right? This is so GARP. I've added it. And that is significant organic growth, because sometimes people are buying growth at a reasonable price. So Biome, right, it's growing, it's super hot, it's on the road to profitability, and some sharp shareholders on the board as well. So there are 2 sections of the business. One is Stanleyco's RF technologies, frequencies, which it had a hammering last year. That's not what I'm interested in. The exciting part of the business is the bioplastics. Of course, what is big? Do you remember before pandemic? Do you remember pre-pandemic days? I mean, because it's been dragging on for 2 years now, pretty much. It's going to be soon, isn't it? Before it's the back of it. When did it start? No, we're now over a year and a half. 18 months we've had of it. No, it started. Yeah. No, the first case was in China, wasn't it? In December 31st, something like that.
Yeah.
It was before that, but don't trust the Chinese. Do not trust the Chinese government. Not Chinese people. Not Chinese people. Government. The government of China.
Yeah.
Chinese people, you can't generalise on 1.5 billion people. But the governments, don't trust them, because they knew it was it. Anyway, so, before the pandemic days, do you remember the big concerns, the big hot themes that were going on? Do you remember that?
I can't remember that far back.
Yeah.
Plastic in the ocean.
Plastic, climate change, carbon footprint. This does all of that. So basically, all plastics. Plastic's amazing, isn't it? Right? It's so durable. Like Steve there talked about Tupperware dishes. See, you'd have
I've got
those
glass ones.
You got glass Tupperware.
Yeah.
What?
How's that Tupperware?
It's the same as Tupperware, but it's glass.
It's not
instead of
Tupperware. Is it
It's
made
not
by
Tupperware,
Tupperware
is
then?
it?
Well, yeah, it is, 'cause it's called Tupperware.
Is it called Tupperware? They got a glass now, have they?
Yeah, well, it's ones that you don't. It's rewashable ones that last forever.
okay.
So
Well, Tupperware's washable, Steve.
it's the same as a Chinese container, but it's not.
But it's
got
not.
Chinese.
It's not a Chinese container. It's glass. It's not the same, is it? It's Tupperware. Tupperware. But
Anyway.
no. But you can have plastic's washable, but it's so good plastic it doesn't break down. And that's because of the oil-based polymers they use. All right. So first and foremost, hydrocarbons. The carbons produced with hydrocarbons are bad, and that's why people try to cut down them. And that's why oil now is the commodity everyone's divesting. All the big funds are getting out of. But you can make those polymers via plant-based. You see, that's what Plastics does. The business of Biome. And they've been doing this now for pretty much, formulating with the universities. They've got IP. I like that as well. See a good moat. But the 6 years, they spent over 6 million, R&D costs, and they're now getting commercial traction. And a couple of areas, films for, plastic films and trays and all that stuff, but also coffee pods. And you realise these coffee pods, they've gone through, coffee is a bit of a craze. The people love it, and they want as good a coffee as they can get as quickly as they can. And those coffee pods things, you've seen those, you put them in machines, put them down, and they make coffee for you. Quite nice in hotel rooms. People have got them at home. But those mostly, they're not... they're not biodegradable. They're plastics. They're landfill. And I don't know, 90%, in fact, the figure is on my presentation, but a massive percentage of plastic that we separate and recycle, all that doesn't go anywhere near recycling. It's like a false economy. It's a rip-off. I didn't know that, did you? I thought they would do it all.
When Espresso have a recycling thing, scheme,
you take them back, don't you?
Yeah, you send them, or send them
they
back,
chuck them in the bin.
And then they put them in landfill, yeah. No, who knows?
That's like, you get all this. No, I remember someone in Wales, they got mad. By the way, in 2023, you have to start doing your food as well now. If you don't do that, if you don't separate your food and all that, that's going to be a law. And that's very good for biotechnologies, because a lot of plastic can't be recycled because it's contaminated with food. It's that sensitive. Yeah. So they spend all this time. Once there was a delay over Christmas. My father's got about 17, outside his house, about 17 bins there, all different colours, different shapes, for all different things, And he's, diligently separating them all week, putting things in that one, this one, green one, all of the purple bin, the yellow bin, pink bin, and then at Christmas time there's a delay. So this big truck came around and just chucked all of them in the back of one big rubbish truck. I spent ages doing that. You just chucked them in all the landfill. This is not a hobby for me. I don't enjoy it.
They did that through the lockdown, didn't they? But to be fair, Cardiff Council let us all know, just saying, they said we can't do it. So,
by the way, all that time you've spent diligently separating your plastics and different colours and tins and glass, we're just chucking the landfill. I don't know why that's so funny. But, this guy just come around, really being a bit overweight guy, a couple of guys on there, just coming by, chucked them all in the back of the truck and drove off. What? Anyway, so that's a lot of that. The percentages is scary, I get it, but it's close to 70, it's above 70% of plastics are not recycled. They're landfilled or just incinerated. And so this is the whole problem. It's not doing anything with it. Landfill is no good because you're polluting the soils and all that stuff. Incineration as well, that's dodgy as well. So what you want to do is get compostable or disposable sort of things that recycle very well, plastics. And they do that. And now they're starting to get commercial traction. In the last few years, they're really starting to gear up. And had 65% growth last year. In fact, let me get the presentation up. They're going to do 51% this year, 40% the year after, 40% the year after that. So that, when you're looking at growth companies, that's what you want, top-line growth. You can have proof of concept, but to have proof of business, you have to have that revenue, that demand. And they've got several things, and they're doing very well in the US. Apparently, the US are a bit more ahead on this than the UK. apparently, especially coffee companies. They've got a lot of coffee companies there, and their pipeline is growing very quickly. It's gone from like 2 to 7 big customers, and they're all testing stuff. And so it's only all-out commercial from here. So I like them a lot. You know what I'm saying? So that's my 5th stock. I've been buying in, and you may have noticed now, I'm a significant shareholder.
Are you?
Are you?
Yes. Didn't you see that? Didn't read the RNSs, do you?
I haven't done. Obviously today, was it?
Yeah. Was it today? No, it wasn't today. It was a couple of days ago. Yeah. I didn't see that, did you? Yeah.
Missed that.
I'm not even following them, so I'm not sure I'm getting the RNSs. No.
You're not even following them. What is wrong with you, Peter? You're a member of the club. You know, you do enjoy the webinars and all that. You know, you're a committed member of the club.
No, I'm not one of the best members of the club, am I?
No, I say you're members. In fact, I should have star badge. Star member of the month. That's a good thing to do there today. You wouldn't get that.
No. Okay.
No.
What do you have to do to qualify for that?
Well, just join in.
Turn up.
Yeah.
Turn up once in a while and follow the companies you're talking about.
Yeah.
Okay. Well, congratulations. How much of the company do you own?
Well, just over 3%.
Okay.
3.02.
Oh, Steve, checking it out.
Do you know what I find interesting about RNSs when TR1 comes out?
Yes.
I can never work out whether it's a buy or a sell. It's not very clear, is it?
But it's the percentage that they owned before and the percentage they own now. You kind of go, that's higher,
do you know what?
That's lower.
It's like anything. Anything you look at forms, any new form that comes out and you have to deal with, it's a bit confusing, isn't it? And
it's a simple fix. All they need is at the top where it says TR1 in brackets sell or buy.
So you go down to the box, right? Number 7 there. It says resulting situation on the date in which the threshold was crossed. So there's a date there. You look at the dates. So date on which threshold was crossed, date on which an issuer notified. Right? That's when told the company. So it says there. Resulting 3.02%, and then position previous to notification. Zero. See, so that's 0. If the one at the bottom is smaller than the one at the top there, and then you've got there's also so you've got another one there, percentage of voting rights through financial instruments. That's maybe you've got options in some way or some kind of leverage bet or whatever. But the total of both in A and B. So that one there's the best one. Look out, go across to the right there, 3%, and there's a total number of shares in issue by the company on the right there. So you can look up by that how many shares I've got. But yes, the one at the bottom box. Should be
this is dated the 7th of June.
Yes, Peter.
So it's a couple of weeks ago.
Yes.
Oh, okay. There you go.
Nothing gets past you, does it? Well, apart from that RNS.
Yeah, that completely passes by. Yeah. Oh, okay. Right, excellent.
So if you look at the last trade update, it's very good. I like it. So they got cash, plenty of cash there, 1.8 million. In fact, 1.8 in March, 1.6 in March, 1.8 now. So that's gone up a little bit. No debt. Okay. The board, in line with current market expectations, significant further revenue growth from this division, this bioplastics division, is anticipated during 2021. The necessary drivers for this growth are being successfully assembled in this half of the year and are expected to give rise to accelerated growth in the second half. And so what I like about this as well, so good value as well, because their market cap, when I started buying it, was like 13, 14. It's about just below 16 now. Now, the revenue forecast for this year is 8.6 million. And for next year is over 12 million. And then 40% on top of that again, year after, that's 16 million. So literally they are not even 2 times revenue, their market cap, So, and they're starting to become profitable as well. So they're going to start generating cash, EBITDA profitability in 2022. That's next year. And that'll grow. The margins will get better as well. So that's what I like that. I mean, when you ever look at a company, obviously you've got to look at the value, but if you've got growth and value, because it's very hard to find both. Because if a company's growing, the valuation, people give it a higher multiple because it's growing, because they realise that the proof of business is working, because there's demand for the product. And when you've got growth, it's hard to find value, but if you can get it, you're onto a good one. Because especially when a company goes to profitability, because then they're afforded a better multiple on their earnings, because they've gone from a loss making, so they may go to 1 time revenue, 2 times revenue, and then all of a sudden got 3, 4, 5 times revenue because it's growing very quickly and they're heading towards profitability. So you get what's called in that book 100 Baggers, the twin engines of share price growth. That is actually top line growth and then the multiple the market or analysts give to that, because they're a growing company in a very hot area. What isn't hotter? Climate change. Then reducing carbons, producing plastics that compost and recycle. You saw those little turtles with straws up their nostrils on cocaine.
What?
Sorry, no, they weren't on cocaine. We've all seen the pictures of those little turtles with straws stuck up their noses, haven't we? You know?
Right.
Have you seen that one where they're trying to get that straw at the turtle's nose?
Yeah.
And the turtle's trying to move away, it's plastic straw, and in the end, he pulls it right out, and you know full well that turtle went, oh, that was so nice. Oh.
Right.
Oh.
Yeah. Okay.
Stick it back up, pull it back out again.
So, yeah, that's your turtle impression, is it? Sorry, I didn't. I don't know. Right. Okay.
So, being part of the club, you've had advance notice on this.
Yep.
What's the problem? Why haven't you been buying into this? This is going to grow. This is going to go quickly, man.
So is it just bioplastics they deal in?
Well, no, there's another company called Stanelco RF Technologies. And this, I can see this being spun off.
That's an oil and gas
basically, listen to this then. This is impressive, right? And this was a cash-generating company, but last year it collapsed during the pandemic. But it'll recover. It's going to recover. So they produce pretty much, fibre optic cables.
Yep.
They sell the machines that make that, pretty much.
Oh.
It's a very niche business. And they said their machines are responsible for probably half of the world's fibre optic cables.
How often do they need to replace the machines?
I don't know, Steve.
Good question, Steve.
I'll ask Paul. Okay.
That's why I
maybe that's why I just asked. And Paul, how often do you need to replace the machines?
If you made them pretty shabby, so people have to keep buying them.
Shabby?
They're good.
Shabby.
What is shabby?
He was in Harry Potter, wasn't he?
Yeah, I think he was.
I hope he's not making them.
No, he is making them. We got Shabby making our microwave, stuff up there. He's good.
Okay.
He's good. He makes a mess of them, so they have to come back and buy another one.
Yeah. So what's your sort of average price you're in at there for Biome?
I'm probably about 30%, but maybe a bit more. But the broker, what's going on there?
Wow. Feedback.
Steve. Stephen.
Steve's died.
Hello, Stephen.
Yeah, I'm back.
What happened there?
I don't know.
You know what happened, Stephen. Don't lie to us.
You sound sheepish.
What did you change, Stephen?
I opened my AirPod case and it flipped over to them.
Right then. I don't know. What are you trying to lie for there? Get away with it. I don't know what happened there. The way you said it as well.
I didn't know it swapped over when you opened the AirPod case.
The way you said it as well. I watched Dragon's Den yesterday. This guy on there, and they're doing this app for kids where he helps them read. And he did that. He literally made up, and with a question mark on the end. And then they were asking for 100,000, right? Steve, look at the valuation. They were asking for 100,000, right, for 5% of the company. What's the valuation of that?
What do you mean?
How much are they valuing the company at? If they're offering equity, a 5% stake, right, for £100,000 to the Dragons, you must have watched Dragons. Are you familiar with Dragon's Den?
I don't really watch it, no.
Okay.
I know the concept though.
Right, there we are. So if they're offering you as an investor, Steve, we'll give you 5% of the company if you invest £100,000. What is the total value of the company?
I don't know.
5% at 100,000.
What, 5,000?
5,000. Let's see. 5,000.
That's good.
So think about it. No, 100 grand is 5%, Steve. So let's double that up to 10%, make it easier. So double 100,000, what do you get?
200,000.
200,000, that's 10%. Now how do you get to 100%?
Halve it.
Halve it! No!
What?
It's my son's maths, this is. How do you get from 10% to 100%? Halve it?
Right, okay, times 10.
Times 10, so we've got 200,000 times 10 is what?
400,000.
Ladies and gentlemen,
this is why I love Steve on the podcast. See, classic. Yeah. Just tell me the ticker, will you? For heaven's sake, trying to trip me up like this on stuff that's not important.
Yeah, with those cunning traps you keep.
There's valuations and stuff like that. Well, just give me the bloody ticker. What is wrong with you?
I've openly admitted that math is not my strong subject.
Well, we didn't have to admit it, Steve, because we made a good guess. So this company came in, there were 2 million they valued the company, had no revenue whatsoever. No revenue, right? So what? And he said, when are you going to start to make some money? He went, tomorrow? So I was like, Steve, and he just said, I don't know. So, I don't know what I've done, was it? But yeah, and he said, mate, you didn't have a clue, all over the place. He said, you can look in your eyes, you're not even convincing yourself. But, so that's why I like, so where were we at on the podcast?
I don't know, I've lost track.
Biome.
So that's Biome. Biome. Boney M.
Boney M.
Yeah. See, we come Harry and Larry. Right, I want to buy some shares in Boney M. Oh, I like Boney M. Harry, Steve's on the phone. He's trying to buy shares in Boney M. Are they listed? Check him out now. Rah, rah, Rasputin, lover of a Russian queen. Is that the one, Steve? Yeah, that's the one.
That's it.
I'd like it if you could ring up Harry and Larry and sing a song and buy some shares. That'd be good, wouldn't it?
Yeah.
Might have a chance of selling them as well.
But you call up Harry and Larry and you put you on hold, and the hold music is like, every day I'm hustling. It's like, what? I'm getting hustled here, right?
I think they should put Rasputin on there.
Yeah, rah, rah, Rasputin. That'd be cracking. If you actually call up to buy rah, rah, Rasputin, Boney M, and they put you on hold, rah, rah, Rasputin, lover of a Russian queen. Oh, these boys are genius. They team their music to the share price you want to buy. That's good. I like that.
It's classic. Right, okay.
Yeah, that RF Stanico is going to recover, and in fact, go back a couple of years, and they were making money. So it just had awful in the pandemic. Of course, you can't ship those machines around the world when you can't travel around the world unless you come into the UK from India and you got the deviant variant or Delta variant, sorry, which is rubbish. But so that's going to be, it'll recover though. It'll be fine, and it'll get good. I'm just looking at recyclable plants. So literally, the European Union only recycles 30% of plastics. And that's including the UK and America. God, America, that's dreadful. 9%. Mexico 24%. Australia 14%. That's ridiculous, isn't it? The best is India is one of the best. That's to do with the economy, I suppose, isn't it? Because they need that because for the water and stuff. But 60% they do. But most places are like way below a third, of plastics recycled, which is ridiculous, really. Can you think about it? A recent survey by Plymouth University found plastic was found in a third of UK caught fish, including cod, haddock, mackerel, and shellfish. That is shellfish, actually, of the human race. So it goes into our ingestion system too, of course. So it's a big problem, isn't it? And I think any company that can, tackle or help tackle this solution, in the end, regulation will be on its side. At the moment, they don't need that. But I genuinely think they can do very well. The global market for bioplastics is predicted to grow by around about 20% compound annual growth rate over the next 5 years. So that's big growth for a big sector, for a sector that's growing. The UK market for bioplastics doubled since 2017. You know this, though, because you've watched my videos, haven't you? They've got 4 growth drivers themselves, looking at 4% revenue growth in the bioplastics division through to the 31st of December 2023. So that's good growth, really good. Yeah. I'm looking for when I'm looking at revenue growth, I'm looking at 20% or more. So 40% it's almost 3 times as good as that, Steve, isn't it? So if you do 20% growth, right? If a stock of yours does 20%, growth a year for 25 years, that's 100 bagger on a thing. Hey, here's a stat for compound. I worked this out earlier. Look at this. Have a guess of this, right? Steve, we'll go with you, the maths. If you invested £1,000 in a company and the share price rose by 1%, that's all, 1% per week, right? Per week, and you held for 20 years, how much do you reckon you'd have? Just invest £1,000. 1% a week, 20 years.
A week.
How many years?
20 years. 1% a week. Not a lot, 1%, is it? Not a lot.
Pete, over to you.
No, go on. Have a go.
I'd have to ask my friend Calvin.
Who?
Calvin the calculator.
And
Go on, get the calculator, Steve. Have a crack at that. Go on.
I'm going to say something like 35 grand or something, isn't it?
No, over 2 million.
What?
Yeah, because you're doing 50. Well, you're doing over 50% compound interest a year. And that'll be over 2 million for 20 years.
Sorry.
You didn't take the compound into the sums there, did you?
No. See, so the compounding, obviously, that's amazing. Isn't it? Just like a grand, if you manage to do and you think, if you look at small cap stocks, they're very volatile, got them down by a percentage easy, in a day, let alone a week. So do 1% a week, face 50% a year, compounded. It's more than that, actually. I didn't compound the 1% because I've already got a chart for compounding 50% a year. But that's so much. 2 million over 20 years, just investing £1,000. See, that's amazing. Hey, who's yawning?
It's Steve.
Well, good job I put £1,000 into it then, isn't it?
Yes, very good, Steve. So why are you not getting in? Come on, Pete, let's have a bit of discussion.
He's in. He's winding you up. Of course he's bought in.
Are you winding?
I haven't. I have not bought in.
He's not even following it.
No, not one share.
I have got no shares in Biome Technologies, no.
What did you say? That's a winner. I'm going to avoid that.
Is it just because you got no money?
No, I've got money, but the strategy that we've talked about is about getting a smaller number of companies and having a larger holding in each. And
how many you got then?
Well, I've got I'm down to about 9, I think, or 10. But
you got 9, have you?
9.
Get rid of them all. What are they? They're not good, are they? You kind of. Do you know what? And I went through on the weekly webinar. I went through exactly why I'm going for 5. It seems like, I mean, if you do have a good strategy and you have sort of quality filters, you can bring down the risk. As long as a company has got cash, it's growing, it's improving, there's no debt, all that stuff. The share price hasn't spiked out crazily. It's in a growing sector, all that stuff. The risks are low, and so I think there's no point investing in a company if it doesn't have the ability to give you a decent return or make your portfolio grow quickly. If you do have a decent return, And in fact, Buffett started off like this. He said he can't be involved in 50 or 75 things. It's a Noah's Ark way of investing. That you invest in a zoo. I like to put meaningful amounts of money in few things. And in that book, 100 Baggers, is do not be tempted by anything that's small. Because it'll dilute. And this was the theme pretty much of the webinar on Wednesday. Concentrate, don't diversify. This myth about diversification, all it does is dilute your holdings. If you don't know what you're doing, fair enough, dilute. And that'll protect you against the risk a little bit. So that's ignorance, basically, protecting you against volatility and risk. But if you know what you're doing and you've researched companies, then you have to concentrate on the winners. Okay, they're not all going to be winners, but if you've got, say, 5 stocks, 20% each, and I give an even worst case scenario. If one drops by 50%, which if you've done due diligence beforehand, there's not a good chance that happened. Very few stocks actually lose 100%. But if you've done your due diligence, you know what you're doing. A 50% drop means a 10% drop in the entire portfolio. So if you've got 5 stocks, And in fact, some of the best fund managers have literally less than 10 positions, and they've got billions of assets under management, So, if you hold 20 stocks, it is a return there, right? If you hold 20 stocks, right, and you get a 10-bagger, which, let's be honest, is very hard. It's not easy, 10-bagger. It's very, very, very hard. Very, very, very hard. You get 10-bagger, and they're all equally weighted, your 20 stocks, for example. Your portfolio only goes up by 50% when you've done 1,000% on one stock. Because you dilute and diversified so much, you're not getting the benefit of the rise there, are you? You want to get the benefit of the rise, don't you? Hey?
But so what's the sort of significant milestone that we can expect in the near future for Biome?
Well, there's going to be obviously more news on trading updates, all that stuff. But it's all fundamental now. It's all backed up by figures. The growth is there. But also they're doing this massive, which is ironic. I didn't know this. There's now a program for climate to plant more trees. And I think they're planting about 3 times as many in the UK. They're trying to over the next 20 years or something. To help, for climate change, carbon, and all that stuff. I didn't realise when they plant these trees, they're really small. To protect them, they put plastic tree guards around them, and which is ironic. Yes. Because then that pollutes the soil because they're supposed to be collected. But all these companies got a business, or they forget about them, don't bother, or they're pulled off by, and so I just
Sorry?
They're pulled off by a deer or something. Ooh, hello, deer.
Okay, I'm with you.
I've heard you say this story quite a few times, but is it in like, I presume we haven't had this chat on the weekend podcast, have we?
I don't know, Steve.
I've heard the plastic around the trees story quite a few times now.
It's not really a story, is it?
Well,
When you come down the weekend, was that what I opened with? That story. Hey guys, sit down, a cracking anecdote. But no, so
I enjoyed it the first time. Second time, I was like, I've heard it before.
Yeah, but so
And
they
now I'm
are.
like-
But anyway, listen, they've done 2 trials with the government. Sorry, with Innovate. They got not with Innovate. They done it with They tested out this. It's very clever. They got this technology that ages, plastic with ultraviolet, with wind. They got these machines that will weather them they give them 7 years worth of weather in like 2 months. Everything from UV rays to rain to wind, and so they test them. So they're now going to field trials. But originally they got about 50 grand from Innovate UK, and now they've gone to field trials. They've now got $250,000 from Innovate UK. So it's obviously going in the right direction. But they're doing these biodegradable plastic shelters as well. There could be news on that. There's news on everything. So if you look at their, so the updates recently and their final results, they've got so many customers in the pipeline now. It's just building that commercial.
I think Screwfix is one of their customers because my Screwfix catalogue came this week and it had the little plastic film going around the catalogue and that was biodegradable.
Yeah, well, do you know what? Like I say, it's one-way traffic, isn't it? Let's be honest. It's going to get to the stage where you can't have these coffee pods. Now, coffee pods is a very middle-class thing, isn't it? Oh, I've got my coffee pot. I've got to have my coffee, proper coffee in the morning. I haven't got time to really make it. I'm going to make my coffee. I've got to have my coffee. So you put it in your coffee pot,
Right.
and that.
Yeah.
And then these things are being landfilled or incinerated. These middle-class coffee companies, a decent profit they're making on these little pods, are being chucked in landfill or incinerated. That can't be happening. ESG, environmental, social and corporate governance, is the biggest driver of investment right now. And if your company is damaging the environment, they'll come under lots of pressure, especially when your peers are adopting biodegradable plastic coffee pods. You've got to get with it, man. Get with the plan, man. And so it's only going one way, isn't it? The war on plastic is going one way, and they're gaining commercial traction, which I like. And so this is why I like it. I just think, sit back, relax, smell the coffee, man, and it's going to go in the right direction. You know what I'm saying? Not for you, though, Pete, because you're not in.
No, I'm going to miss out on this one, aren't I?
Yeah.
Are you actually not going to buy in, Pete?
Well, not yet. No.
Okay. Wait
Take us through some of your stocks. I'll tell you what to do. What to sell.
You know what?
I didn't realise you had 10 stocks. I know Stevens, had loads.
I whittled mine down a bit though.
I don't think 10's a lot.
Steve, but okay. Well, let's go through the thing then, right? Let's potential return you can get. Let's say you have 10 stocks.
I've got 9 stocks. Sorry.
Well, let's say you have 10, because I haven't done it for 9, my spreadsheet, okay?
Damn.
Let's say you have 10 stocks, okay? And one of your companies takes a 50% hit. Your entire portfolio go down by 5%, which is fine, okay? That's fine. But if, you get a 10-bagger, your portfolio will double. But the 10-bagger is amazing. It's very rare to do that. So if you say you do 100% in one company and you got 10 stocks, of course, your portfolio value will only go up by 10%. That's not a lot, is it? You've just doubled your money in one stock. I want a bit more return. I want to feel the benefit of the rise.
Yep.
Do you like feeling the benefit of the rise, Steve?
Yeah. Steve does. Big fan.
Big fan. So what I'm saying is, let's take us through some of the stocks. Let's have a portfolio clinic. Right. Hello. Right. Peter Hibbard, come in, please.
The thing
is it Peter Hibbard here, please?
Yeah. No.
Sorry? Is that you?
No.
Smoking in the crack pipe. Come in, sir. The doctor will see. Dr. Justin's in a portfolio clinic. Coming in. He's in there. He's dressed in his hot pants. Go on. Peter, take me through the stocks, please.
Well, you do know them.
I'm sorry, I've never met you before. I'm a doctor.
Okay. Well, obviously, you got Escape Hunt, Gfinity, Trufin.
I like them, yes.
And Polarean.
Very good. Very good. That's good. Look at that's. I'm checking your heart and your eyes. Looking good. Let's work down a bit now. That's it. So right. Yes.
I'm still holding on the market.
Can you take your box shorts down, please?
Yeah, there's my on the market. Right.
Oh, that's all right. It's not a bad shape. Right.
Okay.
Turn around.
Yes.
Bend over.
We turn around. That's Asia Met.
Oh, my arse. Oh, take an arse. Oh.
Yeah.
You could have washed that before you came in here.
Yeah, sorry.
Oh, my God.
It's copper, isn't it?
It does have the whiff of copper and the colour of copper, actually.
Yeah. So, sorry, Doctor, yeah. But that's what I call my
Dr.
fun
Copper.
corner. That's my fun corner, if you remember, isn't it?
Yeah. Let me say this one thing, right?
Right.
Pop and drop resource stocks, right? The people listening to this who will hate me for this.
Yeah.
You will never... Pop and drop resource stocks will never make you wealthy. Ever. Ever.
Asia Met did this all right, though, didn't it?
Exploration resource stocks, right? Yeah, no, it'll pop and drop. Yeah, you can if you trade it, but you can't put money into it and hold it for a long time and earn multiples because
He has.
okay.
Well, it doesn't really owe me anything, so let's just sat there. It's at like 3% of my portfolio or something. So, it's like that. C4XD, another one.
Hang on, let's go back to resource stocks for 1 second, right? Because what happens is this, right? They've got no money coming in. No money. Oh, in fact, they have every now and again. It's not Asia Met, but any resource stock. The only money coming in is from shareholders. That's it. Then they go out and dig some holes. Oh, look, we're in Africa. We've found a little bit of shiny stuff at 120 metres down. It's about 0.2 grams in a ton. Lovely. And then they spent, and then they've blown all that money on a drill, drilling dirt in Africa. And chucking it in a shed somewhere and and taking pictures of it. Look, see that little bit of shiny bit, right? Yeah. And then they go back to the share price. Then they release the RNS and we got a bit of copper. We're looking for silver mine, but we got a bit of copper. Share price rises. Woo! Now we've used all our money on the drill. Let's raise some more money from shareholders. So it comes out again. There's a fundraise. Right? Dilutes the shareholder base, and that continues. Repeat. How many resource companies, exploration resource companies, do you know, since we've been doing this podcast like six years now, have actually gone on to be a producer?
14.
None. I can't think of any really small. I'm talking about sub 20 million when we start off. Whatever now. All of them are still resource companies, still digging around in the dirt, talking about grades and all that stuff. You can't earn money from that. You can't build wealth. You can't build wealth in those companies. They could be generating, you get the story, generating real value, which is cash, not the potential of real value. Oh, have you seen how much gold we got down there? No, we haven't. Well, we've seen bits of it, but it's down there. Are you going to get it out? Probably not. But we'll tell the shareholders we are.
But, okay, the only other resource is the United Oil and Gas, which, I'm up in it, and it's just sat there. A few percent of my portfolio, probably 3 or 4%. And then you've got, Asia Met, what's the other? C4XD. That whole, what I call my fun corner, amounts to less than 10% total of my...
Yeah, again, what's the point of having that if it's not going to give you a decent return?
But they have potential.
It's a waste of time. No, but listen, oil is in the doghouse, of course. But the oil price is rising and they are producing United Oil and Gas. So that to me, they are starting to generate some real revenue there, So... I'll exclude them, but all's doing well, share price. But all I'm saying is this, I talk about this on my lessons videos. There's two ways share prices rise, apart from, acquisition, some of that stuff. But there's two ways they rise. That's in generating real value, which, what is value? Pretty much cash flow, So the cash comes in, your asset base grows, and then that's reflected in the share price, Or the potential of real value. So we're going to be earning that kind of cash flow in a couple of years' time. We just found some shiny stuff in Africa in the dirt. See? We're going to go out, just kick it around a bit, shuffle it a bit, get the shiny bits out. And we're going to sell it, melt it down, sell it. And that generally never happens. But the promise of that real value generation raises the share price enough for them to get a fundraiser away to raise some more money to dilute the shareholders. And for that, you're not going to have sustained share price rising on that, because there's no real value, sustainable value. I was looking, like I said, I went back a while back, looking at the best performing stocks over the last 5-10 years. You're talking about these companies that churn out, they have 20% growth pretty much from revenue and profits every year, and that is where you get decent, big rises, mammoth rises over years. We're talking like 10, 100 baggers over years.
Yeah. I mean, so I've got 5% cash or something. So I have some money, so I could invest in Biome, but I haven't yet.
Yeah.
There you go.
Yeah.
But I take what you're saying. I just still, those stocks, I take what you're saying, but they are kind of just, as I've said before, tucked away in the corner. Maybe they'll come good, maybe they won't. Who knows?
Yeah. Well, I did a survey saying, how many stocks do you hold? A couple of hours back. The options were 5 or less. People went 38.3% went for that. 10 or less, 26.6%. 20 or less, 25.1%. Lost count, 9.9%. Fair play. At least people voted for that, so I've lost count. I've got so many stocks, I don't know how many I've got ready, to be honest. But,
I'm glad you keep them, Pete, because it takes the attention off my room.
Yeah.
Oh, yes, excellent. Okay, let's go on to Stephen. Yes, the doctor will see you now, sir. Is it Martin? Is it Martin Steves? Come in.
Yeah.
Why have you got two Christian names at the start? How funny that. Come in then. Okay, take your clothes off.
Okay.
Not in the changing room, in the doctor's surgery. Calm down, sir. So come on, Steve. So you sold in Newcastle this week. Unbelievable, Steve. Well, was on a sales spree.
Yeah, I did sell. I sold
break even,
BT. I'd already sold on the market last week. What else did I sell this week? Well, this is exciting. I can't remember what I've sold now.
Wow.
That is exciting. So BT...
Ilika?
Ilika, yes. That's the other one I sold.
Yeah,
Ilika, BT, and on the market.
There we are. So BT's... You back to break even there, Steve, or not?
No, I sold a little bit of a loss there, but...
Stephen!
Yeah, but then it was a case of, do I leave? BT's done well recent. I don't think their EE news today of them charging for roaming's going to do their share price any good, is it?
Roaming kitten.
Well, charging, that's quite good for share price. That's revenue. That's revenue.
No, but customers will leave, won't they?
Well, will they?
Yeah, cool.
When everyone go down that route, though?
Well, maybe, yeah, but maybe.
And
today.
Also, is there hassle to leave and change or not?
Yeah, exactly.
Not really. Anyway, I think I was a little bit down on BT, so I sold that and I put it into Biome Technologies.
Biome. You're struggling with the name even. I'm glad. And what's the reasons why you bought Biome?
I had a dream.
He's even coming out of the lion now, isn't he?
It came to me in a dream.
No. Right, was it? Okay.
Well, seriously, in all seriousness now, what about when I said to you, I like Biome, I'm going to buy it. What was it, the name or the ticker? What was it? What grabbed you? Be honest. Be honest.
Okay, you're getting quite annoying on WhatsApp, so I just thought I'd shut you up.
Buy some then. It's like just a salesman. That'll make it worse because he'll come around again. That salesman will. Oh, is that guy in that with the smart door over there? You just keep talking. He just buys in the end.
Do you know what? I'm just in my Hargreaves Lansdowne account, and it's actually quite a pretty account because I'm looking down, and literally every other stock, so it goes red, blue, red, blue, red, blue, red, blue.
There we are, Steve.
Apart from when it hits Motive Bio, which have been delisted, and that's grey.
Well, do you know what? They're the chance, Steve. It did takeover, IPO, reverse takeover thing, and the shareholders voted it down. So the shareholders, now it's gone. That's it. They've lost all their money.
Really? Wow. Okay.
They've been diluted so much, though.
Because you're a shareholder.
They'd been diluted so much, though. In fact, Vadim came on the podcast and talked about the vehicle. It was a decent company. But they've diluted so much, they were disgusted, and they said, no, we don't care. We prefer to lose our money. No, I quite like that stubbornness. I prefer to lose my money, actually, than even be bothered with this again. Yeah.
That's money that's gone, and that'll probably be stuck as a grey thing in my account now for ages.
Just tell them there. So that is not nice. It was nice, red, blue, and I got a grey one in there.
Yeah.
Grey means dead.
Yeah. So, that's quite pretty.
So how many stocks you got, Steve?
1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13.
What's the other ones then? Tell me, just take us through them quickly.
Okay. We got Advanced Energy, Biome Technologies, Core Gold.
Advanced Energy, what is that?
Biome.
Advanced Energy, Biome.
Biome? Is it Biome or Biome?
Biome.
Biome. Oh, there we go.
Biome.
I think I'm mixing the ticker with the name. That's probably why. Cora Gold, Escape Rooms, Europa Metal,
Escape Rooms, Escape Hunt. Get the brand right, Steve. Escape Hunt.
Yeah. Escape
Cora
Hunt.
Gold.
Why did you buy them, Steve? Because Justin was badgering me.
Yeah.
But Steve, right? Steve's portfolio sounds a lot different than mine, even when he's in the same names. I got Biome, Escape Rooms. I got none of those. What have you got?
Trufin.
Truffles. What else I got? I got Gavin. I can't remember Gavin T. I got Gavin T. and Pollux. Yeah.
Right, okay.
All right, but I'm just thinking. Listen, it's just think about that. What potential those small stocks you have, either go with conviction or don't bother, because they're not going to transform your portfolio value in any way. So if you don't have conviction in them, deadhead them, get rid of them.
No. I got i3E Energy, and I've only got £117 in that.
i3E Energy. Okay. How much?
Right.
£117.
What did you start with? 10 grand.
Oh no, you're all right. That's what it's worth. No, it's £400 worth.
Okay, well, Steve, you'd be doing a lot better now if you deadheaded, wouldn't you?
Yeah, well, to be fair, I took profit on that years ago. I don't know why I got such a small amount in it. I don't know why.
Well, so you said that again.
Well, this is great listening, guys. Yeah. We're down to Steve's dregs of his portfolio that he's held for 5 years.
i3 Energy now is starting to generate some cash, Steve, and the oil price is going up, right? So. Literally,
so get into oil and gas stocks, guys. Come on.
If it pops there, you may want.
I get my £400 back.
Yeah, break even, Stephen. Live up to your name, Steve. Oh, break even. Sorry, Stephen phone. He's breaking even again. Crack open the champagne.
Yeah, is he going to buy more of that Boney M?
Sure. Yeah, we couldn't find it, Steve.
Do you know what a stock I do in which I had an interest in? Trackwise. Because they had an RNS this week, which they plummeted ridiculous. Yeah.
Okay. Oh dear, that's not good.
But are you getting with me, and then you don't get out when I get out? Why is that?
Don't know.
I didn't lose any money.
You didn't, but you didn't say Trackwise. You didn't say you were leaving because it was bad. You just said you wanted funds to get buy other stocks. So
yeah, too many. No, I broke my strategy as well. It was too big, and I was too late. If I'd invested that when it was sub 20 million, I'd done very, very well, and I should have. And that's it. Most of these companies have come from sub 20 million. That's part of the strategy, and I was too late.
But I quite like the concept of that company with the flexi circuit boards.
Yeah. No, listen. Apparently, they've extended that contract with the EV OEM, original equipment manufacturer. It's gone up from 38 now, roughly to 54 million. But apparently, it's been delayed a little bit, so that's why people said, they jumped out of the stock, and then final results. And of course, final results look backwards, so it doesn't tell you anything about the future.
I thought the results were quite good.
Yeah. Well, what did you like about them?
Well, they went up. They reduced their debts. Yeah, it was generally quite nice results, and obviously the share price went down with it. I was like, oh, nice.
You went there on it. Oh, that's nice. That's nice. Oh, so the market opened up and dropped off a cliff. Oh, that's
okay. I'm thinking they can't have been that nice.
Yeah. No, I mean, let's be honest. They turned over 10 times revenue they valued at, and then they delayed their project a little bit. That big revenue generator, which is 54 million, which is not far off where their market cap is minus their cash. So the potential's there, and they're in the right area. But they've risen very quickly of late. And anyway. Do you know what? I'm coming to the conclusion, reading a couple of books here. If you're holding the shares, and I tweeted this out, and it got quite popular there, and a lot of people retweet, and even add a ticker of companies that are questionable, but I'll let it go. I said, if you're holding the shares of a company whose business is growing and improving, and will continue to do so for months and years to come, do not be concerned about the price the market offers you for those shares today or tomorrow, unless you want to take advantage of a bargain price. Holding a good improving company is the secret. It's what many investors can't do, and it is the secret. If the company is growing and improving, just hold. That's all you have to do, and that's hard. I find that very hard. As humans, we're not wired to do nothing, I find even go to holidays, the first few days of a holiday, I can't just stop moving around. I get sort of depressed. I can't just sit here doing nothing. What's the point of that? So, we are almost, it's a lot easier to do something than nothing. But that's the secret. If you're in a growing company, it's doing very well, just there. There's been companies in that book, 100 Baggers, where they've had sort of lulls for if it's in Netflix or some of these companies, they lost 20% in a month, lost 80% in one period of time. But if you held on, you don't 100 bagger, So they go through these periods where there is volatility. That's not the business. That's just the share price. Don't be confused by the share price in the business. If the business is improving, patience. It's very hard to see your share price go down when you think the business is doing well. It's very frustrating when you see other companies, share prices going up. But if you can hold on, that is the secret.
Okay, marvellous. And on that bombshell.
Yeah. One other thing I was going to say, right now, it's frustrating. The fast, easy money has been made. Right, the fastest and easiest time to make money in the stock market is invest after a big sell-off, recession type sell-off. You can pretty much put any stock. And I'd say to anyone, if you're listening to this, you're brand new to investing, and like Rich, for example, in a WhatsApp group, he's not started investing. If he picked any old company in the Dash for Cash crash, when it was on the headlines of the news, saying, "Oh, the stock market has lost £10 billion in a second, or $100,000 trillion in a minute," that's the time to start scaling in, because from then you could double your money in any company. But right now, it's now a stock picker's market. You've got to pick better than the crowd.
Do you know what, though? You say that, though, because you could have done that going into the lockdown, and some huge companies went under, so it's not always the case.
No, the companies went under, though, had debt. That's the problem. Debt's a killer. Trying to avoid companies with debt or unmanageable debt. But I mean, even if you'd bought a fund, Steve, anything, funds are doubled. Well diversified. So the best time to make money off the back of a recession. Always. But now, so the fast, easy money's been made. You have to be very selective now about picking the companies that are better than the pack. You have to select good stocks, good companies. And that's where it changed different now, because I've seen quite a few people jump in on the Dash for Cash and made amazing returns. So they've got in, Argo blockchain and stuff like that, or they've got in Novocyte, phenomenal returns. Now they're growing lower, those companies. Like I said, Novocyte was like 12 quid. It went from like 14 pence to 12 quid in 2020. And now it's down at £3.38. So it's almost, 2/3 of the value is lost in the share price. And now it's getting harder, because that trend of testing, has the peak happened, or is the peak very close? Because we're not going to be testing as much as we were, soon. I mean, so again, with Bitcoin has rolled over. So now you've got to look at, you're going to be very selective in what you pick. And longevity wins all the time. Okay, anything else? We're done with it. Oh, by the way, COVID's in my nerves. People have been scared about the vaccines. Don't be scared. If you're vaccinated, you're fine. Honestly, you are fine. Do you see that 7-day average of patients admitted to hospital in mid-January was 4,181. 7-day moving average now, patients been admitted 224. 95% drop. Less than 1% of UK hospital beds are occupied by COVID patients. So I just said, stop the scaring. The vaccines are working. People said, case numbers, testing positive have gone up, though. The thing is with that, they'll test areas that are hotspots. So that's the whole thing. People with symptoms or in a hotspot get tested more. But they tested 800,000 people yesterday, and they got 16,000 cases. Positive cases. That's less than 2%. Even if you're testing in hotspots and people with symptoms, it's not a big deal. Get vaccinated. If you're not vaccinated, by the way, we're going to open the economy without you. We can't look after you. People are saying, "I'm not going to get vaccinated." I say, "You don't know what's in it." How big a sample rate do you want? We've got 70-odd million people vaccinated now. We don't know, this has not been through clinical trials properly, and we don't know what's going to happen long term. Someone said, "Can you guarantee in 10 years' time it's not going to damage you?" I said, "You can't guarantee anything in 10 years' time. I could be dead in 10 years' time by knocked down by a hedgehog driving a car."
Yeah. Can I add the most middle class end to a podcast? My Sainsbury's orders here, so I've got to go.
Bloody hell! You check those coffee pods, yeah?
Yeah, I will. Yeah. Okay.
Steve had one question we have to do next week, Steve. Save your Polarean question to next week.
Okay. It's not time.
By the way,
I can't wait.
By the way, there's a trading update on Escape on Monday and et cetera. And I've also just released episode 1 of a single podcast. So have a listen to that if you want to, boys. All right.
Okay. Yeah. Right. I gotta go. Cheers, guys.
The Share Pickers Weekend Podcast with Justin, Paddy, Peter and Steve. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.